Hi everyone, welcome to a massive market update. Can't wait to crack in and show you what we're going to look at. I want to keep things pretty straightforward and simple. I'm going to zoom out today, have a look at the monthly chart, have a look at one indicator that you really need to be focused on, touch on the hash ribbon, and also show you the Ethereum Bitcoin chart, what dynamics are at play there. Thought we were going to have a bit of a dump over the weekend, but just didn't happen, which is really interesting because the S&P 500 futures looked like it wanted to puke. Bitcoin generally is the leading indicator of the S&P 500. That didn't puke either. So very, very fascinating things at work here. And I think a lot of it's focused on Europe, but really you need to be focused on the dollar. If you want to know what's happening in risk markets like crypto and US equities, if you're seeing this constant pressure to the downside, it's because the dollar is skyrocketing higher. Like it's trying to break out to, decade highs where it should shoot off a little bit higher, maybe it's about 118. You don't really need to be across that too much, but I just wanted to bring it to you at a high level on why we're just seeing this constant move to the downside. A lot of issues are happening in Europe where they're trying to devalue their currency, which in turn, when you're looking at US dollar, which is called the DXY, it's the US dollar compared to a basket of other fiat currencies. And if every country outside the US is devaluing their currency and the US dollar is getting more scarce, the dollar is going to rise against it. So that is why we're seeing a lot of that pressure, and the denominator being US dollars. If you're looking at Bitcoin USD chart, if the US dollar is going higher, what's going to happen to Bitcoin? It's going to go down against the dollar. So just something to keep in mind. Let's move to the monthly charts. What I want to show you today, keeping things super high level, monthly gives you a lot of data compared to the weekly and the daily. So every single one of these candles you see on this screen is a month's worth of price action. And when you're looking at moving averages and other indicators on something like the monthly, again, you're getting a lot of data. And the more data, in my opinion, the more accurate it is going to be and allows you to make better data-driven decisions. So this blue line here is really, really important to me, and it's the crux of what I'm going to show you today. It's the 21 moving average on the monthly chart. So it represents the average of 21 of these monthly candles. So the average is that line. Now, what do you see whenever Bitcoin has cracked that 21 moving average? Bitcoin goes into a bear market, and then it goes a sideways accumulation until it breaks through that 21 and moves into a new phase of the market. So super interesting to look back to 2014, had the high, came down into this phase where everyone's in a bit of disbelief that it's all over, and then we have the crackdown into a capitulation, then that sideways, then the crack back through signals new phase, then we hit the halving, and then we're in a bull market. What happened in 2017? Almost carbon copy. We had the disbelief, everyone doesn't think it's over, cracked through into capitulation, but all the way down to about 3,000 after breaking that 21, then sideways accumulation. Then about midway point, we have a reversal and we move higher. So again, sideways doesn't really make any new lows. Very, very important that you see this box visual here, because I'm going to put it over to where we are currently and why it doesn't look as bad as you think it does. Then when we finally crack through, which is about, I think it's about 181 days, 180 days, give or take, crack back through, we're in a new phase of the market, had COVID, don't worry about that, it was a bit of a black swan, but apart from that, we're trending above it, moving higher, hit the halving about here, new bull market. So very, very obvious to see that the 21 is a pretty good metric to watch for the mid to longer term investor if you're watching these cycles. Now, where are we now? This is very, very important. We had the high, the 69,000 there, but likely the market, had that topping dynamic in these areas, even though the on-chain situation wasn't showing us that. So if we are adhering to this 4-year cycle again, this is how it likely plays out. Even if we're a bit early and didn't have the blow off top, it's very clear the macro got in the way of anything that would happen up here. But the 21 moving average here got breached the 1st of April. We fell down into this capitulation phase here. Hopefully the lows are at 17,500. I'm fairly confident that is the case, unless something blows up in the macro. And then we're now in this sideways accumulation box, just like last time. So if we're going to go from the capitulation candle over to the end of this box, I've drawn it about the same as the last 180 days. Where are we now? We're in the midpoint where we've seen previously the reversal begin to happen. So very, very fascinating to see whether it plays out exactly like it did last time. I don't think it will. It might rhyme, which is why I've got this box here. As we move higher, potentially to crack this level at 40,000, The halving is in April, or late March, early April in 2024. So about here, so it's a fair way away. So this market is going to really move and do its own thing. But right now, all we're concerned about is, are we in a real bear market accumulation, that real bottoming area, which is in this box, in my opinion. When we breach that 21, we're out of it. We're in a new phase. We could go straight up, we could go sideways, we could, just do exactly what we did last time. But right now, focused on that. That's all I want to look at. For me, that is super, super interesting. Now, as well, I want to show you this here, which is a Fibonacci retracement. So they're mathematical levels, which generally market adheres to over time. And in these bear market areas, I saw in 2017, we did almost identical this. So if we have a look at Fibonacci here, the retracement, we had let's say that's capitulation lower at 17,500, give or take. A move off the bottom, almost a dead cat, or just the market trying to price this all in, moving high, got to 25,000. We had this real crawl back to 0.786. So these lines mean the retracement percentages. So 0.786 is about 78% retracement from the high up here. So we've moved back here. Again, these are very useful levels in uptrends where you can try and place in bids as the market's moving higher and it's pulling back just slightly. Most of these levels quite consistently. So keep that in mind. But what I want you to remember is the 0.786 level. Let's say we're in this box. Let's say it's going to happen exactly the same as it did last time. Let's have a look what happened in 2019 bottom. So we have the capitulation low. We draw the Fibonacci retracement to, say, one of these highs up here, candlestick. Let's just say that there. No, let's actually say this here because this makes a bit more sense compared to where we are at the moment. We had the rise up, bit of a dead cat, and then we had the real slow crawl back to try and really confirm the low. And it came back down to the 0.786 exactly, hit it on its head. And then we really began to blast out of this box, just constant disbelief higher, those lower highs, higher highs, continuously moving higher out of the box till we broke through. So that 786 is really, really important. And it is important that what Bitcoin is doing is very similar because we are very, very close to that level 0.786. So lower 19,000s are almost perfectly in line with what we've seen previously. Would not surprise me to have us come down and touch 19,000 again. Really create a bit more fear. It's all over again, blah, blah, blah. We're moving out. But overall, if you just look at how the market is just shaping up, this is shaping up to be a higher low from the low. So yes, new lows are possible. Yes, we can come back and retest the lows. But right now, I'm looking at historical price action to give us an idea of what's happening here, because we are in, according to timeline and according to on-chain data, we're in a prime area to see a bottom form. Now, adding to that, the hash ribbon. So we talked about the hash ribbon a few weeks ago. It shows you when Bitcoin miners become insolvent. And whenever they become insolvent, there's a thing called the miner capitulation phase. And the hash ribbon shows us when that capitulation phase has started and when it is over. And when it is over, the hash ribbon indicator on TradingView, you can go to indicators, search for hash ribbon and put it on your charts like I have here, it's free. You can see when the optimum time to buy. So when it flashes buy, it means the capitulation is over. And historically, it has shown that it is a very cheap point, or a point of maximum, I don't want to say maximum financial opportunity, but it's shown you a point of, if you buy, you can get Bitcoin at very, very cheap prices, and it's before a very big run up. So it's pretty subjective where you want to take profit from it. But again, historically, when it's fired, it's been an incredibly profitable point. And I'm just going to show you here where that has been. So if we have a look here on this box just here, excuse me, my son's just having a bit of a cry, probably at my charting. But if you see here, the middle of this box where we are right now, buy signal. So miners have hit insolvency, more efficient miners are beginning to take over. That sell pressure on the market is diminishing. Buy signal, bang, up to these highs in June 2019. But some of the real great hash ribbon buy signals are, let's say, out of COVID, then we run up to the highs. Another one was here before a little run up high. So when the market is incredibly tight, when profitability is incredibly tight, you can get a few of these fire, in quick succession until the difficulty adjustment hits and the market prices everything in. But this is the best one I've seen. This one was November 20. So just as we were really moving into previous all-time highs at 20,000, once we hit that, we moved into these phases of 315%. Altcoins are pumping about 1,000%, minimum each. We're into the full bull market phase. But right now, if we are looking at historical, actually compared to we are now, middle of this box, roughly buy signal, middle, and then, run out of this bear market accumulation phase. What's happened just now? Buy here. So be very careful as well not to use this as a short-term day trading signal. I've seen that maybe being thrown around because we had it in our newsletter, and some people a little bit, questioning why it's not, hasn't worked within 7 days since releasing the newsletter. Well, you have to think of this as a mid to long-term cycle tool to tell you when the market is in an extreme point, where, again, historically, it has shown you if you buy in these areas, it doesn't give you an exact point to buy. It does flash buy, but the price could be wherever in this box. If you have that signal and you're a long-term investor and you're playing for the next bull market cycle or even mid-term point, into the halving in 2024, this has been a tremendous area of financial opportunity when these buy signals happen. So just keep that in mind. It's not a short-term day trading signal, although you could maybe use it as such. With everything being said and the macro as it is, we can see volatility throughout this box. But overall, if you're seeing this signal, again, it signals a pretty good point to enter the market, even if you're just dollar cost averaging. All right, that's what I wanted to show you at this phase. I want to quickly finish on the Ethereum Bitcoin chart. So this shows you how much Bitcoin you can buy with Ethereum. So instead of looking at Ethereum US dollar chart, where you see how much Ethereum you can buy with US dollars or vice versa, this is Ethereum to Bitcoin. So it's showing you essentially an internal financial trading pair, which is very, very fascinating. And why it is fascinating is because over time, Ethereum and Bitcoin, if you can buy more Bitcoin with your Ethereum, altcoins have been in a relatively state just before they're about to explode. And that's what we're seeing here. You can see Ethereum is about to rip through this huge horizontal, which goes back multi-year horizontal. So I remember saying in 2021, when we ripped through this with conviction and come back, test the support and go higher, altcoin season is going to be insane. Our altcoins really fire, but because of the Ethereum merge, it looks like Ethereum is really gaining, especially price-wise, obviously, against Bitcoin quite hard, because Bitcoin's going sideways, it's being stagnant, but Ethereum's got this big catalyst coming mid-September. So expect Ethereum to really run against Bitcoin. Again, historically, we have seen in previous cycles that as soon as Ethereum breaks out of a key horizontal against Bitcoin, the altcoins underneath have a great runway to really move higher. So keep that in mind. We could see a bit of a purple patch for altcoins, layer twos, things like that built on Ethereum and other sectors of the market if this really runs through. But with the merge on, you just don't know what's going to happen. I'm also on the flip side a little bit cautious, because if when you're looking in the past, when Bitcoin has been going sideways or is losing value and Ethereum is trying to really break out against it, same with altcoins, it generally tells you that altcoin season, or the altcoin part of the market, the maining, is about to really cool off and reverse. So there's always that one last gasp higher. This obviously is a bit different, but I wanted to bring that to you because Ethereum looks to be, a bit of a good thing against Bitcoin in the short term. So guys, I hope you have enjoyed this episode. Make sure you're watching those charts. If you have any questions or comments in the VIP or graduates group, make sure to drop them below. More than happy to have a chat and provide some commentary. So have a great day. We'll catch you again for our Altcoin Bible Wednesday and our Friday roundup as well. Bye.